Hello guys, welcome back to Mr. English Talks. I'm truly glad you're here, because today we're going deep. Not just surface tips or quick tricks, but a full, thoughtful journey into one of the most life-changing topics you'll ever explore: how to invest your money wisely in 6 powerful assets. This isn't about getting rich overnight. It's about building real, lasting wealth, the kind that gives you freedom, peace of mind, and the power to shape your future on your own terms. And whether you're just starting your first job, studying English late at night, or already earning but feeling stuck in the paycheck-to-paycheck cycle, this message is for you. Because investing isn't just for the wealthy. It's for anyone who's willing to learn, take consistent action, and respect the power of time. Let's begin with a truth many people miss. Money by itself does nothing. A dollar in your wallet is just paper. But a dollar placed wisely becomes a seed, and like any seed, it needs the right soil, sunlight, and patience to grow. The 6 assets we'll discuss today are those fertile soils, proven places where your money can take root, grow, and eventually provide shelter, shade, and fruit for years to come. And the best part, you don't need thousands to start. You just need clarity, courage, and consistency. Asset 1. The stock market through index funds. Most people hear stock market and think of chaos, red arrows, shouting traders, or risky bets. But the real magic of stocks isn't in gambling on one company. It's in owning a piece of the entire economy. How? Through index funds. An index fund is like a basket that holds hundreds or even thousands of companies at once. For example, the S&P 500 index includes giants like Microsoft, Amazon, Coca-Cola, and Johnson & Johnson, but also hundreds of stable, less famous businesses that power everyday life. When you buy a share of an S&P 500 index fund, you're not betting on one winner. You're betting on human progress itself. Historically, this index has returned about 7–10% per year on average over the last century. That doesn't mean every year is positive. Some years are flat or even negative. But over 10, 20, or 30 years, the trend is upward. Why? Because businesses innovate, solve problems, and create value, and as an owner, you share in that growth. Now here's the real game changer: compound interest. Let's say you invest just $200 a month starting at age 25. At a conservative 7% annual return by age 65, you'd have over $520,000, and you only put in $96,000 of your own money. The rest, grown by time and compounding. That's not magic, that's math, and it's available to anyone with a smartphone and a brokerage account. Start small. Use apps like Fidelity, Vanguard, or your local bank's investment platform. Set up automatic deposits, even $20 a week. Never try to time the market. Instead, time in the market is your superpower. Keep investing through highs and lows, because every dip is just a sale on future wealth. Asset 2. Real estate, more than just bricks and mortar. Real estate is one of the oldest and most reliable paths to wealth. But you don't need to be a landlord with 10 properties to benefit. Real estate works in 3 powerful ways: cash flow, rent; appreciation, rising value; and leverage, using borrowed money wisely to amplify returns. Imagine buying an apartment for $200,000, renting it for $1,200 a month, and after expenses and mortgage, you keep $300 in profit every month. That's passive income, money while you sleep. Over time, the property may also double in value, and because you used a mortgage leverage, your actual return on the cash you put down could be far higher than if you'd paid in full. But if $200,000 sounds impossible right now, don't worry. You can start with REITs, real estate investment trusts. These are companies that own and manage income-producing real estate, like shopping malls, apartments, or cell towers, and they're traded like stocks. You can buy a share for as little as $10. Many REITs pay monthly dividends, giving you steady income without dealing with plumbing issues or late-night tenant calls. Whether physical or through REITs, Real estate adds stability and diversity to your portfolio, and it's a hedge against inflation, since rents and property values often rise when prices do. Asset 3. Your mind, the ultimate appreciating asset. Here's something no one can take from you: your knowledge, skills, and ability to create value. While stocks and real estate build financial capital, investing in yourself builds human capital, and it often gives the highest return of all. Think about it. Spending $300 on an online course in digital marketing could lead to a freelance side job that earns you $2,000 a month. Learning fluent English might help you land a promotion or work remotely for an international company. Every skill you master increases your earning power, and unlike a stock, your brain compounds returns every single day. But invest wisely. Don't just collect certificates. Focus on skills that solve real problems: communication, critical thinking, coding, sales, emotional intelligence, or even public speaking. And pair learning with action. Watch a tutorial, then build something. Read a book, then teach someone else. The moment you apply knowledge, it becomes power and profit. Asset 4. Bonds, the quiet guardians of your wealth. When the stock market shakes, bonds often stay steady. A bond is simply a loan you give to a government or company. In return, they pay you interest and return your original money later. Government bonds, like U.S. Treasuries, are among the safest investments on earth. Corporate bonds offer higher yields but come with more risk. You can buy individual bonds or bond index funds for instant diversification. Bonds aren't meant to make you rich quickly. They're meant to protect and stabilize. As you get older or when markets get volatile, bonds act like ballast on a ship, keeping you from tipping over. A classic portfolio for someone in their 30s might be 80% stocks, 20% bonds. By 60, it might shift to 50-50. This isn't fear, it's wisdom. Use bonds to sleep well at night while your stocks grow during the day. Asset 5. Businesses, your ticket to unlimited growth. A job trades time for money. A business trades value for money, and value can scale infinitely. You don't need a big idea. You need a real solution. Maybe you bake amazing cakes. Maybe you're great at organizing small events. Maybe you can teach English online. Start small, test it, charge fairly, reinvest the profits. Over time, systems replace your time and income becomes less dependent on your daily effort. And you don't have to start alone. You can invest in someone else's business through platforms like Kickstarter for products, or equity crowdfunding for startups. Or simply support local entrepreneurs, your neighborhood cafe, tutoring center, or online creator. Business ownership, whether yours or through smart partnerships, is where true wealth acceleration happens. Asset 6. Alternative stores of value: gold, silver, and cautious crypto. In uncertain times, people turn to assets that have held value for centuries. Gold and silver don't produce income, but they don't vanish when currencies weaken. Think of them as financial insurance. Many wealthy families keep 5–10% of their net worth in precious metals, not to get rich, but to stay safe. As for Bitcoin and cryptocurrencies, tread carefully. They're highly volatile and still experimental. If you explore them, treat them like high-risk speculation, never core savings. Only invest what you can afford to lose, and never let hype override understanding. True wealth builders prioritize clarity over FOMO, fear of missing out. Now here's the master key: diversify, but start simple. You don't need to buy all 6 assets tomorrow. Begin with one, maybe an S&P 500 index fund. Automate it. Then, as your confidence grows, add another, like a course to boost your career or a small REIT. Over time, your portfolio becomes a garden with many kinds of plants, some fast-growing, some slow, all supporting each other. But before you invest a single dollar, build your foundation. Pay off high-interest debt, create an emergency fund, 3–6 months of expenses, and live below your means. Investing is the engine of wealth, but only if your financial car isn't leaking oil. Finally, remember this: wealth isn't about luxury, it's about choice. The choice to say no to a toxic job, to spend time with your kids, to help your parents, to travel, to rest. And that freedom isn't bought with a big salary, it's built with smart, consistent investing over time. So tonight, do this: open your phone, download a trusted investment app, set up a recurring transfer $10, $20, $50 into a low-cost index fund. Then write on a sticky note, "I am building my future one smart dollar at a time." Stick it on your mirror. Every morning you'll see the person most responsible for your wealth, you. This journey won't be loud. It won't go viral. But in 10, 20, or 30 years, you'll look back and realize the quiet choices you made today were the loudest declarations of your self-worth. If you like this video, don't forget to subscribe to this channel.